Welcome on my YouTube channel. In this video I would like to talk about recessions in US. Also it often leads to world recession, so it's very important to identify these recessions um, with accuracy, and we're trying to forecast a recession with indicator development by me, and compare it with official data about recession from government bureau from US. And the first one is importance of determining recessions periods in the United States. Determining recession periods is crucial for the economy, business, investors, and governments for various reasons. Accurate identification of recessions helps effectively manage financial, strategic, and economic decisions. Proper understanding of the current economic situation plays a key role in ensuring resilience and preventing long-term negative consequences for the economy and society. Next, reference points and reliable data on past recessions. To determine a recession period, it is essential to select authoritative and reliable reference point based on data from official source. The main source that can be confidently relied upon is data from the National Bureau of Economic Research (NBR). NBR data on economic cycles phases including official start and end dates of recessions. So it's very important to take some origin source points to understand where recession was happening and where is not. NBR is primary bureau in the United States that officially declares recessions. We will take information from this bureau, and why is it necessary to use NBR statistic for accurate identification of recession periods in the United States. So NBR statistics are widely used for accurately identification of recessions period in the United States for the following reasons. Authority and independence. NBR is a recognized organization that conduct economic research, including determining phases of the economic cycle. Their analysis is based on a broad spectrum of economic indicators, providing the most complete and objective assessment of the economic states. NBR is an independent organization and is not influenced by political pressure, which makes their conclusion more reliable. Use of conventional indicators. NBR use numerous economic indicators such as gross domestic product (GDP), employment, industrial production, household income, and other macroeconomics indicators. Objective methodology. NBR does not limit itself to GDP dynamics, but considers the overall level of business activity in many aspects of the economy. This helps identify recessions that could have been missed with an error approach. Historical accuracy and long-term observation. NBR has been tracking economic cycles in the United States since 1920s, allowing for historical comparison and analysis of prolonged economic cycles. This helps accurately identify recession and expansions, even in cases of subtle and slowly developing economic events. NBR statistics are the most reliable and comprehensive source for determining recession in the United States, as they are based on a wide range of economic data and hold authority in the economic community. So as you can see, it is very important to find out the origin source for this statistic, to be sure we are in recession or not in recession in the past time had been. This data is available by this link on the chart on the screen, available on the screen. You can follow through this link and see all data information from this bureau. Disadvantage of recession information provided by the National Bureau of Economic Research. Let's take a look what is disadvantages. First of all, it's time lag. One significant disadvantage of the information provided by NBR is a delay in official announcement a recession. The Bureau analyzes economic data retrospectively, which can take months after the start of recession. This makes the information less useful for timely decision making by companies, investors, and government bodies. Second one is a lack of specific criteria for forecasting. NBR definition of recession is based on many indicators, which may make it unclear for those seeking specific, straightforward criteria. For example, unlike the widely used rule of two consecutive quarters of GDP decline, NBR methodology is more flexible and requires professional analysis, which may complicate the independent assessment of the current situation. Third one is a limited update frequency. NBR does not update its determination frequently, and sometimes there is a sense of delay in providing current information, especially when data indicates change but no official announcement had been made yet. Fourth, a complex methodology for the general public. NBR methodology can be difficult for the general public to understand as it relies on numerous economic indicators and does not always provide clear signals. This complicates the use of the analysis for quick decision making by mass market participants. The recession information provided by NBR is highly accurate and comprehensive, making it reliable and authoritative. However, its useful may be limited by delays, the complexity of the methodology, and insufficient update frequency, reducing its practical applicability in real time. Um, in this slide, we talk about visualization of recessions on a S&P chart with the using of NBR data provided by FRED, Federal Reserve Bank of St. Louis, on the past recession. The full report title is NBR Based Recession Indicators for the United States from the Peak through the True, US RECM. It's available on the platform TradingView, and you can easily add it to the chart. The data updates every month for this ticker, and let's have a look at this. Recession confirmation. So this indicator is based on NBR data, which officially announces the start and the end of the recession, usually with some delay. Indicator confirms already accurate recession by displaying a value of 1 in areas where recession has been confirmed and 0 otherwise. So 0 no recession and 1 we're currently in a recession. Since NBR identifies recession periods retrospectively and with a delay, it is important to use leading indicators for determining recession periods or adjust trading activity in the market. We talk about this a little bit later. First one, I would like to show you this NBR indicator provided by Fred. It's located in bottom of the screen chart. So as you can see, if 0 no recession, it's most of the time, and when it's equal to 1, it means economy of US in a recession currently. We can see crisis, dot-com crisis in 2001, also 2007, 2009 crisis. The last one crisis was in 2020 COVID crisis. As you can see, this area officially confirmed by NBR as recession. Currently, this indicator didn't show nothing for the September of 2024. But before, if we look more deep in the history, you may see it shows all recessions in the US. Official recession information from government bureau. As we can see, a lot of recession was before, and all of them you can see by this indicator. But what most important is to use leading indicators for determining recession periods. It's very helpful for trading and for investments in stocks, also for traders, short-term traders also. What is the importance of using leading indicators for determining recession periods for traders and investors? First of all, it's quick decision making. It helps to make good decisions in the market. Portfolio optimization, increased profitability, risk and volatility reduction, cash flow planning, maximizing opportunities in recovery condition. What is leading indicators can be? It's government bond yields, yield curve, unemployment levels, federal funds rate, and a lot of more. These leading indicators play a key role in a successful trading and investment activities, helping to react promptly to upcoming economic changes, minimize risks, and leverage emerging opportunities to maximize profits. I'd like to introduce the US Recession Finder, an indicator for predicting the beginning and the end of recessions made by me. This indicator uses mostly fundamental data provided by bureaus, official data from government bureau of US. Mostly used fundamental data and sometimes use technical data for finding end of recession. This indicator can make a recession prediction. It shows on the screen labels like recession soon, to predict an impending recession based on current data and models, largely relying on the fundamental analysis of economics indicators officially published by Fred and other government bureaus in the US. This makes it useful for forecasting and taking preventive measures. Recession start and recession end. Recession periods are displayed as areas on the chart. Labels like recession start and recession ends attempt to indicate the beginning and end of a recession as accurately as possible. The US Recession Finder focuses more on forecasting and warning of any recessions. It aims to predict a recession in advance based on current economic data, which is useful for investors and analysts, but may lead to false signals or adjustments as the situation evolves. Actually, it cannot lead to false signals. It's very accurate signals, prediction signals. And as you may see, if the orange area is appear, it means recession soon, with label recession soon. It means we already in recession, or recession will be very very soon. Recession starts, it's a hot phase of recession when no long entries is available. But after recession ends, the market is again in a normal state of economy, and you can buy, you can use portfolio management, buy stocks, buy indexes, and everything else will be rise again. But in the orange zone and red zone is it's very highly risky to trade, to buy. So as you can see, this zone from indicator indicator didn't use this NBR information from this indicator. It used only fundamental data and make his own analysis of situation, but it's highly correlated with NBR information. Uh, Sometimes it's very similar, like in this period, 1972. Before 1972, data is not available for indicator. Uh, that's why he cannot predict recessions on a very long, on very historical data ranges. It can make prediction only from starting from 1972. But starting from 1972, it's like around 50 years. It make predictions highly the same as officials. So we can see recession in 1819s. In this area, recession also to the same. 1991 recession. Yes, it's just it's make prediction before, before sometimes before top was reached, sometimes after, but it indicates that something wrong in economy, and recession probability very highly. It's highly like 100%, like in this place. Top was reached a little bit before, and good prediction of recession, also good exit from recession. Official NBR indicator shows in this case not too much correct information, I think, for recession, because after they fix recession is finished, the price still go down and go down go down very go down very too much. This is a recession of 2008, 2007 till 2009. Also, this indicator predict recession before and shows good exit from recession. And the last one recession, most recently, it's 2020 COVID recession. It indicates also before everything shut down and fall down, but the red zone a little bit not so good was predicted. But if not trade in whole this area, it can save a lot of money for investors. For the current situation, it's now it's 2024 year, 2nd of October. As we can see, recession was predicted in 2022, in the end of 2022 year. And now we're going in a hot phase when no buys allowed. It's very dangerous to buy. Actually, this place is very good for sell short. Next one. In conclusion, the indicator demonstrates high accuracy in the define all officially registered recession in the United States since 1972. This makes it an important tool for traders and investors, allowing them to adjust trading activity according to current economic cycles. It can be useful for both short-term and long-term trading strategies, especially during recession periods when markets become more volatile. Investors can use this indicator for decisions such as temporarily halting investment activities or reducing trading volumes to minimize risk during economic instability. Furthermore, information about recession provides an opportunity to use market downturn strategies, such as open short positions and betting on a decline in indices and stocks, which allows for profit even during economic downturns. Well-informed use of the recession indicator can not only mitigate potential risks, but also serve as a foundation for successful trading in unstable condition. Thank you for watching this video. I hope it will be interesting. subscribe on the channel. Thank you.